Friday Night Finance with the Stock Lips. Had a busy week of trading. Had mostly the same trade going on for quite a while now, and I was just taking pieces of it off as the market went higher and higher, and that's really all I'm going to talk about. I'm going to do a little bit of leveling on here, playing some Everquest. Got my dude here. I made a guild, Gamma Risk. Look at that. Because that's kind of what's going on right now. Everything is so volatile. Gamma is the rate of change in your measure of risk. So in options trading, gamma is the rate of change of delta. And delta is how much you make or lose per dollar movement in the stock. I don't know how complicated that is for somebody that doesn't know what that is, but it's basically a way of measuring the rate of change. Or the rate of change, not necessarily the change itself. So right now, we've got AI, we've got elections coming up, we've got the Fed that's still tightening, we've got softening numbers, we've got crazy political climate, we've got all this stuff. So things could change so quickly that our world can be a completely different place in a matter of days or weeks or months. It's not like before when it took years to have any kind of meaningful change. Now it's happening so quickly that there's high gamma. So we have a lot of gamma risk, which is kind of why I went with that. Also, there were some other names that were taken that I would have rather had, so I just went with that. All right, so we are going to run over to the Southern Desert of Roe. What was that? We're going to run over to the Southern Desert of Roe, and I'm just going to fight some gators or something like that. I'm level 18, so I'm just kind of looking for stuff that's blue to me and I can take care of relatively easily. And then once we get there, I'll pull up the charts and we'll talk about what I did. Right now, let's see. I want to see what's over this dune. I know there are some bandit camps around here, so I got to be careful not to get attacked by one of those wanderers that's actually kind of a high level. Can't remember the name. It says like Divin or something like that. It's a dark elf from one of these camps. It's much higher level. Actually might be in the camp. I really don't remember, but all this stuff's gray to me, so it's not going to give me any experience. I'm just going to run over to Southern Row. Right here, I like to go by the water. That's where the caimans are anyway, so it's okay to go this way. I pissed off a desert madman, but that's all right. They're not going to do anything. All right, so the zone should be right around here. So hope everybody's been doing well. I've had a pretty good week. Last couple of weeks have been pretty decent as far as trading. We've had a few binary events, and the latest one was the CPI and the PPI, which came out a day later. So CPI came out on Wednesday. It showed that inflation lowered more than expectations, and not just headline. The core inflation went down, and that's the one that's been sticking. So there's two types of main measurements by the CPI. There's the headline inflation, which includes everything that they measure, and there's core, which excludes volatile things like energy and food. If you remember last year when the war in Ukraine started, food went up, energy went up, everything went absolutely to the moon. So headline was really high, and that was the one we were looking at first. But as that came down, core really didn't move all that much. So it's been kind of, people have been criticizing the Fed going, oh, core's not moving, oh, core's not moving. Well, core's moving a little bit now. And that's because we're starting to see the effects of everything that's been going on. And I say starting, I've been saying we're starting to see the effects for the past few months because these things take a while to actually play out. It's still in the starting phases. Now, the ISM new orders minus inventories measurement is showing that inventories are going up and orders are going down, which is the wrong direction if you want a bull market. It's saying that there are fewer orders overall and companies have higher inventories. And the more inventory you have, the more pressure you have on margins, meaning that you're going to have to sell things a little bit cheaper in order to compete with everybody else because everybody else has inventories too. Now, this isn't extreme. It's not an extreme buildup, but it's enough to start thinking, maybe something's going to come of this. We've still got rate hikes going. We've got inflation coming down. We're starting to see some movement in unemployment. Not a lot, but it's something. Every time we see a little uptick in the numbers, that's telling you that this is working. And what's sad about it is working is taking people's jobs. It's ruining people's lives. At least maybe temporarily, maybe permanently. I don't know. But for the most part, it's terrible that in order to have a functioning economy, we have to have losers in this case. So that's kind of what's going on. We're starting to see the losers come out. Businesses were hanging on to employees for quite a while because they were still traumatized from the pandemic where they let everybody go and then they had to hire everybody back real quick. And of course, people weren't all going back to the same job. So that means some people had to pay a lot more. And then production had to be ramped up so quickly that they had to open facilities that they hadn't used in forever or make new ones. It was just this mess. And companies didn't want to be caught in that again because, as if you remember, there was the threat of another lockdown coming for a long time. That's all people were talking about in 2021. And some of 2022, they're like, well, another lockdown's coming. Look at these numbers. Look at COVID, blah, blah, blah. But it ended up not coming true. So these companies are now thinking like, okay, well, we've pretty much got that under control and all this other stuff's going on. Interest rates are going up. I think we can start letting people go. And they kind of have been. In tech especially, they really have been. But other industries, it's been a little bit slower. And the fact that core inflation's coming down is telling you that some of these orders that companies are making to get the materials they need to do what they're doing is starting to have an effect. So we have pressure to the downward side. Now, does that mean I think the market's gonna go down on Monday? Well, I don't know. It's specifically any given day. We had a nice week. We had a bit of a dip this week, but it could dip a little bit. But I think in the short term, after the Fed meeting, we're actually gonna have. A rally seems likely to be either a rally or kind of a sustained consolidation at the higher levels that we've been sitting at for a little while. If the Fed comes out and they are more dovish, which the odds of that are higher now because of CPI coming in lower, and especially core inflation, then that could trigger a rally. Now, that rally is going to have a top on it. If things don't continue to move the way let me get this real quick. I'm going to attack some stuff. Let's get going. So if things continue to move like they have been, and orders do continue to drop, that kind of stuff, then the reality of what's going on is going to hit the markets. We're going to have a little bit of a squeeze if things are dovish at the Fed because there are still so many doubters. There's doubters the whole time. All you've been seeing is all these people coming out like, oh, it's over. Like, come on, dude, look at the numbers. All right. Get out of the political climate. Like, stop looking at all that stuff and look at what's actually going on with the numbers. And the numbers are saying that things aren't as bad as they've been fearing that it was going to be. But the numbers are also telling you that, like, it's not all-time highs worthy stuff. We're getting close to all-time highs. On the chart, which I'll pull up as soon as I finish beating up this thing real quick, you can see we've made progress. I have 3 levels set for the most volume at a certain price. So you can see where resistance is going to be high. And we've passed that top level in the range that we've been trading. So now we're getting close. We're in between the top of that and all-time highs. Are we going to get to all-time highs anytime soon? I don't know. Maybe. I could see us going back down because we pumped up so much, but I could also see us rising a little bit. I think my gut is telling me that we have a little bit more in the tank before we top out. What happened last time was we pumped up from the beginning of the year up to that first or second level, and then we sat there for a very long time. Oh, I'm supposed to have Clinging Darkness on this dude, so he won't run for me. Well, I mean, he'll run, but he'll be really slow. So what was I saying? I completely forgot about that. Yeah, I was saying stuff. I forgot what I was saying. So things are looking a little bit more like we might have a rally. I don't really know. It depends on what the Fed says. If they come out hawkish, then we won't. I mean, here's the thing. Like, I think the potential to the upside is less than the potential to the downside. So if we get a move to the upside, it probably won't be as great as a move to the downside would be. Because right now, we've gone up quite a bit. I mean, let me pull up this chart. I can just kind of, I don't really need to be paying too much attention to this. I can just kind of get the spells on this guy and, let it go while I look at charts. And, of course, it's going to run and I won't notice. But let me pull up the chart here. So this is the SPY. You can see I have the highlight of the days turned off just because it's such a small screen. It makes it a little easier to see. Over the past few days, or over this past week, we've moved up. And we kind of hit a top and came down a bit today. But if you look at how much we've gained in the past, 5 trading days, that's quite a bit. And if I back this up a little more, let me see what... Oh, we have this chart over here. I can actually zoom in on this. So you can get a better idea of what we've been doing lately. So this line right here shows you the beginning of the year. So at the beginning of the year, we came up from below the bottom line, hit this middle consolidation area, bounced off of it, hit the bottom one, bounced off of that, and then I got to chase this crocodile here. And get the croc. Didn't need to do that. It's slowing it down. Okay, so let's do that. Let's get out of the way a little bit so I can talk. And I don't really need to rest, but I don't even have my pet. I should summon a pet. Let's pull this back up. So, we basically, beginning of the year, we came up, hit the middle consolidation line, came down to the lower consolidation line. These are the high volume points that I was telling you about, the prices that have the most trading volume. And when it came back up to this middle area, it sat there for a while. This was heavy resistance because this is one of the biggest lines of these three. This has the most volume. And if you look, when we bounce down here, all this stuff down here is the volume on the day. Volume shot way up. So people knew that, number one, they were afraid, so they were getting out. Number two, people knew this was a good chance to get in. I mean, these giant spikes that you see in volume right here tell you that institutional players were coming in and buying everybody that was selling, and we ended up popping right back up. And these were great entry and exit points. I mean, every time, if I got in down here, I was holding till about this line, and then I was dumping. And the same thing, if it went down, I would just hold, or I would hold until we got close to the line and then get out of the position, because these were areas where it would consolidate or bounce. And look at what happened. It did that every time. It consolidated here, and we shot right up to the next level relatively quickly. This was because of the debt ceiling and a previous economic reading that I don't remember and all kinds of stuff. And when we got up to it, what happened? We bounced off of it. Actually, this is where you can see we got up to it. We kind of poked over it a little bit, but I mean this line is representing this whole area. This is just telling you that this specific spot was where a lot of the trading was. When we went over it, we came back down, and we bounced up off of it again a few days later, and then came down, struggled when we got to it, and then shot right up above it because of the positive CPI and everybody expecting a positive CPI. So these kind of moves right here, these are squeezes. So you can see that there was a squeeze here. We had a squeeze back here. Maybe some squeezes in here, but I mean, a lot of people just aren't buying it. And I think once the shorts get caught, they think everything's overvalued, so they wait a little bit and they re-enter and they end up having these problems. So right now, this is not looking like it's a good short yet, if you're just going based on the technicals. Let me zoom in. Now you can see that we're above this line, and we've kind of sat at this level for a little bit, but this is after hours trade, right? The trading day, we keep moving and then sitting there. This right here was probably a little bit of a squeeze, but we came back down and sat here. So we had CPI cause this squeeze, PPI caused the continuing momentum, and then the ceiling is because we've gone up so high. And I have to define some new volume lines, because once we pass this, I don't really have another high volume area, considering we weren't above that for very long. We haven't been up at these levels since 2021. That's telling you right there, it's an important spot, because the low volume means not very many people were trading here. People were getting out, but only the most gullible were getting in, because they were seeing everything go up. They didn't know anything about the Fed. The Fed had already said, hey, stuff's going to go down. You know, we're gonna put some pressure on the market, but you don't know that stuff when you're just getting in. And manias cause people to get in late, because they just see it going and going and going, and they get in when it's either close to too late or already too late. So we're kind of in new territory. So I'm going to have to figure out, if we stay above this and keep going, then I'm going to have to figure out, besides the all-time high, what parameters I could use for entry and exit points, because I don't like just using price. Like, price is a good indicator, but it's only one thing. It doesn't tell you, like, price just shows, okay, this is where it got to and went back down. But why did it go back down? Volume gives you a little bit of an idea of what happened. Volume tells you the actual trading that was going on, not just the highest price, because that highest price could literally be one buyer. It could be a bunch of buyers or one. You really don't know when you're looking at a volume candle for the entire day or for just a section of it. It's not very explanatory. So I like volume profile, which is the lines that I have here, the sideways lines that tell you at which price how much trading was going on. And that is what caused me to use these as entry and exit points. So now that we're past it, all-time high is the only thing I have. But I do have a feeling that we'll at least come back down here to test this. I mean, this squeeze and this run-up will probably get sold off a little bit, because people have some gains. A lot of the bulls, consumer sentiment is up. So people think that the market is going to go higher. And consumer sentiment has been rising and rising lately. Even with all the bearish stuff that's going on, people still think it's going to go up. So what did I do? Let's go over to the stocks that I was playing with. So mostly, I just went with the inverse SPY, SPXS. Same thing I did before. I think the last stream, I was talking about the exact same thing. I've been playing this because it's cheap and it's easy for me to get quite a few contracts and be able to shave off specific numbers of them in order to take some risk off the table as the move goes in my direction, or if it goes against me. See, I sold contracts every single day this week. I bought some starting on Monday. I had some from 2 weeks ago. I got out of those. I sat in cash for a little bit. We had a bit of a correction, and then I started getting them again. I don't think, actually, I might not have even sold out all of them. I might have still had some from the last play, but I at least sold most of them, so I had to build it back up. So I built it back up, mostly on Monday, and then we ended up moving up a little bit on Tuesday, and that was before the CPI came out, so I thought, all right, I'm going to go ahead and just take a little bit off the table because I have some gains. I had my gut, my brain, everything was saying the CPI is going to be good this time. This would be a good chance to load up, but the experience told me take a little bit off the table just in case. Well, in this case, it didn't work out so well. I mean, it did work out, but it could have worked out a lot better. I mean, I took profits on just a few contracts, but by the end of the week, each one of those contracts was worth so much. I had the 13 and the 14 puts on the XPXS, and you can see it moved in the opposite direction as the market. So the market moved up, and this moved down because this is inverse to the SPY. So it's basically it buys things like puts, and there are other strategies that they use to make money when everything goes down. It's like a way to hedge, but really it's a way to gamble. It's not something you want to buy and hold long term because it's guaranteed to go down over time. Even if the market moves in its direction, eventually the thing's going to have to drop because there are going to be some good months even in a bear market, and that's going to cause them to have to renew contracts at a loss and continue buying over and over again. All of these plays that you see, these inverse plays, these volatility plays, what they're basically doing is they're buying some sort of a contract to the downside, and when it doesn't work out, they sell them at a loss and they buy more, or they let them expire at a loss and they buy more. That's what they keep doing. They just buy them over and over again. If you look at the long-term chart, it's not very good. Let me switch this to the day so you can see what I'm talking about. This would be 1 year, 1 day. You can see, look, over time, this does not look good. So if you bought and held this thing, you're not in good shape right now. You might think, well, last year, the market went down so much. Why is it like that? Well, because of the reason that I just said. Oh, I only have 1 year on that. I have to add some more time. Let me see, 1 year max. Max weekly. Let's do weekly. Okay, so there you go. There's a better idea of what's going on. Here it is since 2018. And it was never $350. This is because it has reverse split so many times that the chart's all messed up. When stocks reverse split over and over and over again, it looks like the early days of the stock were way higher. And it's not just about the fact that things have gone in the direction that this thing wanted it to go. It's because they're buying contracts at a loss when things are up. If you remember 2018, 2019, things were moving up quite a bit. 2018 had some volatile moments, so it was more of a sideways, slightly down year. But 2019 was all up. And look at this. So you can see at the end of the year, this thing shot up. But since the market didn't continue going down, this just went down, 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 down. Popped for the pandemic, and then down, 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 down. You can see it's had this little bump from last year where things were kind of volatile, but because they're usually operating at a loss, it's going to go down. Not to mention, I still think there's management fees on stuff like this. I don't know if this specifically has a management fee, but that would just be extra on top of it. You know, so these are not things that I hold long term. These are things when I think there's going to be a big move and I want to buy something that I can shave off little bits of here and there instead of having to spend, hundreds of dollars per contract on a SPY contract or a NASDAQ contract or whatever I'm trying to play. I'll put it this way. I was buying these contracts in the teens. It was like my average was like $16 for the 14 strike, and it was like 30 or 40 for the 13 strike. And by the time I sold those, they had 4x'd in value. Some had 3x, some had 4x'd. So that was pretty nice. So let me switch this back to the hourly. I believe that's what I was on. 30 days, 1 hour. That makes it easier. Okay. Yeah, so I was just buying them for the week. I didn't want to continue them, so I got rid of my last contract today. I took advantage of all this. When everything was up here, I dumped them last, and it started to come down. So... the puts, never mind. So everything went up and I was buying puts in here, right? Where's 710, right? So everything popped up. I had already sold in this area right here because I was doing the same thing last time. And Sloan Fishby, what's up? Thanks for joining me. I appreciate that. I've got your premiere going. Awesome to see. I was just doing an interview with Sloan Fishby the other night. We got the premiere going on YouTube, so check out his YouTube. It is on his Twitch page. Link to it right there. Radagast the Brown on YouTube. He's got the premiere of our interview going right now. It's probably a good way into it at this point, but it'll be on there afterwards, so you can go check it out. We talk about all kinds of crazy stuff. We get into the conspiracies. It's all, but my show's a lot more like stock oriented or whatever. His show's anything goes. It's kind of crazy, like almost anything goes. But anyway, so when this popped up, I was buying some puts in here because this is when they were going down. The average was in the teens. And then as they were dropping here, I was letting them go. I mean, the last ones I let go were in the 60s. So I let some go in the 30s, some go in the 40s, some go in the 50s, and the last go in the 60s. I think the bulk of them I let go in like the 40s and 50s, which was nice. But I always like to take a little off the table, which is why I let some go in the 30s, because I thought, you know what, I've got some gains right now. I let some of those 13 strike and some of those 14 strike puts go just in case, even though I should have held them. That's just the way I do. Like, I can't suffer the losses that I used to suffer. I would rather miss out on some gains and just take longer to make money than get squashed like I have in the past. It's just too much. One of these days I'll be able to stomach holding through those kind of things, but for now I just got to take my gains as I go, because if things turned around, which they frequently do when stuff like this happens, I at least have something. And that was my thought. Even if things turn around that first day before anything even happened, I covered a lot of my cost basis because things had already pumped in anticipation of it. And I knew they would. When everything dropped, I thought, all right, it's going to pump a little bit because there's so many stories about the CPI being good, or the potential of the CPI being good, that a lot of people are going to buy into that. So I got in before they did, luckily, while everybody was still kind of readjusting their last section of positions. And then I was right, so I thought, take some for safety. And when the CPI came out, we had that nice shot on Wednesday. I dumped a good chunk of them then. And when it continued on Thursday, I dumped another good chunk. And I only had a few left going into Friday, but I let them go actually before everything started coming back down. So let's flip this back over to the SPY so you can see what I'm talking about. So zoom in. You can see it was kind of pumping. Close the thing. Hold on. All right, so you can see it was pumping a little bit pre-market. The high volume here is the actual market. Everything in here is pre and post market. So you can see it was kind of pumping up a little bit. And early on in the day, like 7, it says 7 was the peak. I don't think I sold it at the peak. I think I sold it somewhere in here. I want to say like 8-ish is about. So maybe this candle right here. Somewhere in this candle, I decided to let it go, and I'm glad I did, because it came back down to this level that it was sitting at before. Now, it could continue to go. My guess is, since we have the Fed coming up on the 26th, which is the Wednesday after next, this week could see a little bit of a pump in the early part of the week, but then usually it slows down and starts to come back down in the last couple days of the week and the first couple of days of next week, or the next week, before the Fed, because people are unsure. However, there's a little bit of volatility for those last 2 days where a lot of times I expect it to go down and then it pumps because people are thinking what I'm thinking and they're trying to get in early. I mean, these traders that were new in 2020 and 2021 are now seasoned, the ones that are still here, I should say. So they kind of know what's going on a little bit better. And the institutions know, and everybody, people have a better idea of how this market plays out now because we are in a different environment. It's totally different than it was in 2020 and 2021. Last year caused a shift that now has this environment being what we're normally in. We used to, when we would normally see a drop, there's a little bit of a recovery because people expect it to happen. So my thing right now is I dumped those contracts. That was pretty much it. I had some other stuff. I actually bought a couple of puts on Robinhood because I was expecting something. I was expecting them to top out since they were close to range, and this was a total gamble. They didn't. They kept going, and those puts weren't down that much because I was buying long-term puts, so it wasn't that bad. And I thought today or yesterday, one of the days, I'm going to get out of these. This was a stupid gamble. I shouldn't have done it anyway. I didn't lose very much at all. I almost broke even, but I did lose a tiny bit on that. So I got out of that. That was my other trade. And then Canopy Growth. So they are an absolute mess, right? I've had some random CGC leaps forever, and I've been moving them out farther in time. You know, the cannabis play has not been good to me. And Canopy, a few years ago, was a powerhouse. They were the one I wanted to have if things pumped. And that's why I've been getting them. I've been getting leaps and stuff like this because I think when it pumps, it'll be good to have this company. Well, not anymore, because I wasn't paying that much attention to the fundamentals. And they're doing right now, they refinanced their debt or something like that. So now we're left with this company that why didn't this switch over? Let's see somebody. We're left with a nice dump on the day. You can see when this thing just came down. I had some leaps, and what sucks is my leaps were up, and I thought, all right, I was thinking about selling them every single day. Like, I need to get rid of these things because this company has not been looking very good lately, but we have the potential for that marijuana bill. What is it? Safe? Is it SAFE Act? I can't remember. The Safe Banking Act, which would allow banks to lend to cannabis companies. That's the big thing that's keeping them from going. Federal illegal, it being illegal federally is causing banks to not want to touch it, which means that these companies have to get money through other means like venture capital and things like that. And there's just not an endless supply when the stocks continue to go down and prospects don't move anywhere. But we have an election and we have a very unpopular president and vice president. So they're going to need something to talk about when they get up there. There's always the core that'll vote for either side, but the swing voters in the middle are not happy with anybody. So they need something to bring some of those back. And it's the Democratic Party. They should have the cannabis bills going right now, but it's just not going. It's not moving very well. Because there's still so many old heads in the game that don't want cannabis because it's reefer madness or because it threatens their business. And that's more likely. It's the ones that have businesses that will be threatened by cannabis, like big pharma, which is stupid because they could get in on it. And things like industries like paper and wood and materials, which could also get in on it, but they don't because they're already established. It would cost money to switch over. So it's just this big fight. Instead of progress happening, it's just a big fight. Anyway. So when this happened, it had bounced a little bit after that, and I looked at the news and went, I'm done with this. I don't want to mess with it anymore. I've got my ETF shares. I don't need to be gambling on a specific company. I've lost so much freaking money on CGC. I don't want to do it. So I dumped them. They were down just barely below what I bought them for. So again, it was a small loss on those ones, but that's not counting all the times I rolled them over for like the past couple of years. I've been buying these things since like 2021, dude. It hasn't been fun. I've been buying fewer and fewer I literally only had a couple of contracts. I had like a handful at the most, and they were cheap contracts. So I just dumped them. I don't want to deal with it. It's probably going to bounce because I did that. Oh no, that's not the mindset I want to be in now. Like it's probably because of this massive move, it could have a nice little bounce the way Big Lots did. Cause I had some Big Lots shares. I was trying to get a summer trade on them. And they just absolutely tanked after they cut their dividend. So I dumped out of them, and they went lower after that, and I felt like a genius for a couple of days. But now it's back up like twice at what it was when I sold. I mean, it's above what my average was. It's so stupid. It's so stupid. I hate that kind of stuff. But that's why you don't play the gambling game. That's why you try to look for things that actually have a possibility, like a real possibility. And the market did. Let's go back to the SPY. The market went up because it was very likely it was going to go up. I was able to take low risk plays on it and made some nice gains. So the past few weeks have been excellent. I've been making safe trades. They've been keeping the gambles to an absolute minimum. I've been cleaning up my leaps position. So I'm much more in cash than I was before. And that's what I'm doing right now. I'm sitting in cash until we get to the Fed meeting. And that's my plan. So I'm going to go back to a little bit of Everquest and just kind of bullshit for a minute. And then I'm going to call the stream because I have some other work that I need to do on some videos that are coming up. Let's see. Let me get, I'm close to 19. I don't really want to get all the way to the level tonight, but I'm going to go ahead and just fight some stuff right now because I enjoy doing that. But yeah, it's been an interesting week, and the news has been crazy. The markets have been crazy. I've been talking to people, and they've been saying like, "Oh, shouldn't be moving up so much," and it's like that's how it goes. There are more people. There's more money trading the market now, even regardless of how many people are actually trading it. There's, number one, more money. Number two, there's algos. Now there's AI. There's just all this stuff that's causing things to move more than it used to move. So I'm just taking advantage of it when I can. But other than that, life's been pretty crazy. And next week, I'm going to have a different stream. Just because Canark is coming out. That's the first expansion for Everquest. This was the first expansion of a big mainstream MMO. And they nailed it. I think Canark came out in the year 2000 because this game came out in 1999. And I'm not going to take the yellow. That one's 20. It's 2 levels above me. This game came out in 1999. And expansion packs were just, that's gray. I didn't want to fight that one. Oh, well. Expansion packs were just kind of becoming a thing. If you played The Sims, the original Sims, they kind of really... expansion packs were around before The Sims, but they went nuts with it. After a couple of years, there were so many expansions, and then there was another game, and they put expansions on that. So Canark was the first expansion for this, and they absolutely nailed it. It came with some problems for sure, but they realized the popularity of the game, so they made a much bigger area. They improved the graphics for that area a little bit. They added new monsters. They added a new race. I don't think they added any new classes, but they basically expanded the game. They upped the level to 60. Right now, it's 50. I mean, I'm nowhere near that. I'm level 18, so I haven't really been playing that much because I dumped a bunch of energy into the last couple of TLPs, and this one's more just for doing the stream, really. I just wanted to have a game to play on stream, and I like Everquest. I like the Everquest community. It's been fun on Twitch, so I'm doing it a little bit myself. But yeah, so next week, Canark comes out on Thursday. It's probably going to come out early in the day, but I'm going to be doing my stream at the normal time. I'm saying 9:30s are my 9:30 is my normal time now because I'm frequently coming in a little bit past 9 o'clock. It's difficult to get everything done, get over here, get all set up, figure out what I'm gonna say, and then actually get going. So 9:30 next Thursday, that's July 20th. I'm gonna be playing Canark. I might have some friends hanging out with me. We're gonna go explore a little bit, talk about Canark and all the things that went on with it. We got some stories about all that. That's the plan for next week. I don't think I'm going to try not to do much trading next week because I really, I did well enough. It's like you don't want to keep going back into the pool over and over again. Eventually something might get you. So it's good to take your gains and hang out until something looks good. So I'm going to kill this crocodile, and then I think I'm going to actually call it, since that's about all I really wanted to do. That was loud. That skeleton was loud. Is anyone else on me? How am I doing on experience? Yeah, barely moved. I don't really want to do that. All right, I'm going to go park my dude over here and call the stream tonight. So that was fun. It was an interesting week. I'm glad I was able to make some money, and my trades were smart. They could have been smarter. There's definitely money left on the table, but that's fine. Oh, look at that. Lockjaw. That is a special mob. I'm not going to fight it, but this guy gives you a lockjaw hide vest. This is a nice little low-level thing. I think I have some banded mail, so it's a little bit better. I wouldn't be able to kill it anyway. It's level 225. It's also a rare creature, so it would be a little bit tough. It's too bad. It would be nice to get something like that. If I couldn't use it, then maybe one of my other little random characters that I'm probably never going to play again could. So that's it. I might stream once cartoons later. I don't know. All right, Sloan Fishby, if you're going to be on, I'll keep an eye out for you. I'll jump onto your stream, but right now I'm going to call it. It's been a fun week. Hopefully everybody else has been doing well. And if you're looking to trade, just be smart with it, because we've seen a lot of movement, and we're getting close to the highs that we were at before, which means high volatility and uncertainty in the range that we've been trading. So let me pull this back up real quick. One last thing before we go. So in the range that we've been trading, if I switch this to daily, you can see that these were well-defined points that I drew last year. So these lines have been sitting on this chart for about a year, and they held up so well. I mean, look at this. This one just bounced right off of it. This one barely, once it pierced it, it came right back up quickly, sat there and took off, sat at this one. When we came up, this was the place where it bumped. So these have been really strong indicators. But now that we're past this, I don't know what's going to happen, so I need to watch. I need to look for another range. I'm a very good range-bound trader. I'm not so good in new territory because I'm jittery. I want to get out too quickly. Let's see, it's hot and I don't really want to turn off the fan. Yeah, well, then you could have a stream with fan, or you could stream later. Or you could rerun the stream you already did. Whatever you want to do, man. There's so many different ways you could go about that. So, all right, well, thanks for hanging out with me. I'm going to dip out now. It's going to be probably a crazy week, but I'm going to stay real low. I'm just going to be watching the markets unless there's a really good trade. And then the week after that, it's time for the Fed, and that's what I'm saving my cash for. I'm going to be streaming that Wednesday, the 26th, 11 a.m. Pacific time. That would be the time if you're going to make trades, if you're going to make day trades, it's going down then. So keep a lookout for the setups that you like around that time if you do day trades or anything like that. So, all right, have a good night, have a good weekend, and I'll talk to you next week.